Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish opening white Mariposa yesterday, and you can argue it was also a bullish engulfing pattern. But as the previous session was a dragonfly doji, I think that point is actually moot. The market used the April 2017 low at 105.68 to punch up through the congestion at 106.13, the low at 2020 low at 106.36, and even the cap on the market for these past 2 weeks. And that's been the descending short medium moving average, currently 106.48. However, the extremes of the move up were not sustained, and we ended up closing back below the moving average and the 2020 low. The recent break out of the previously highlighted mid-July to late October bear channel, highlighted in bright red on my daily chart, is still on, though the market is having difficulties in moving higher, despite yesterday's bullish opening white Mariposa and the previous session's dragonfly doji. We still have the October-based bull channel, currently at 105.51 to 107.50, which is again still not highlighted, as there seems to be no hurry in utilizing it. Back to the original mid-July to late October bear channel. I'd previously laid out potential topside targets for such a pattern of a primary target X in the 107.10 area with a secondary target X1 in the 108.05 area. These are still valid despite the declining short medium moving average, as well as the imminent dead cross, a lagging indicator I hasten to add, of the slowly declining medium moving average, currently 108.03, and the slowly declining long moving average, currently 108.04. So far today, nothing. Caught between a congestion at 106.13 and the short medium moving average overhead. Cable, aka sterling against the US dollar. A straightforward bullish white soldier, which is a suitable follow-on higher to the previous session's indecisive doji cross. That was also a dragonfly doji in disguise. Now the market utilized the support at 121.51 for the move higher for a break and close above the short moving average, currently at 121.72, though not as far as the next congestion. That's the June 2020 low at 122.48. The market is approximately in the middle now of its recent range, and it still continues to exhibit a wide-ranging indecision between the May 2020 low support below at 120.73 and the overhead 50% Fibonacci resistance of the June 21 to September 2022 move at 123.16. The main recent feature here had been the breakdown below and out of the March to August rising wedge pattern, highlighted on my daily chart in bright red. The targets for such a pattern were a primary target in the 124.10 zone and a much harder to reach secondary target X1 in the 116.05 zone. Now the primary target was achieved in mid-September, but the secondary target looks now very much out of reach as the market has decided to hesitate within this May 2020 low at 120.73 and the 50% Fibonacci line of the June 21 to September 22 move at 123.16. I was minded to recently retire target X1, but I have instead relented for now. I have, over the last few sessions, pondered on whether the action since mid-August may not have elements of a bearish halfway hesitation or double bottom about it all. I am still pondering on this matter. Now, so far today, well, not much, but seemingly using the short moving average for an attempt up towards the June 2020 low overhead. Euro sterling. An indecisive spinning topped yesterday, which can also be seen as a bullish engulfing pattern. The bullish engulfing pattern wasn't that hard to achieve as the previous session was an indecisive doji cross. Once again, for about the 8th time in about 2 weeks, the market once again punched up and over the April 2021 high at 87.19, but failed again to effectively close over it. Below, we still have the slowly declining long moving average, currently at 86.90, highlighted in gold on my daily chart, which I suspect the market is using as a base now for these forays higher. Amongst the levels, we have the newly highlighted in purple breached lower time, currently at 86.13, of the late August to early October bullish Andrews pitchfork, and above, highlighted in bright red, is the even newer middle time, currently 87.36, of the bullish shift pitchfork for the same move. I'm not sure which of these is the paramount pattern, so I've kept them both on for now. The recent idea I raised, that the move since early September may be a bullish halfway rotation on top of the recent roof pattern, well, that's still front and center, though a bit dented as an idea. We have a potential target X2 for this pattern in the 87.95 area. And the overall bigger pattern still remains the June to September roof pattern, with a primary target in the 87.42 area that has recently been achieved, and a harder to reach secondary target X1 up at 88.18 area. That's 1.8. So far today, well, a dip down to the lesser Fibonacci line at 86.98 before a move back up to test the lower purple tine and the April 21 high at 87.19 again. US dollar against the Indian rupee. An indecisive spinning top yesterday, capped by the October 2022 high at 83.27. However, it could also be seen as day 2 in a 2-day meeting lines pattern, typically a bullish pattern. Despite all this, the market closed once again over the blue highlighted upper trendline extension, currently at 83.22, of the late July to late October ascending triangle pattern. This time the market punched down through the flatlining short moving average, currently 83.20, but failed to close below it. Overall, we still have a breakout below the lower trend line of the same previously highlighted late July to mid-October ascending triangle, despite the recent high closes, but it all continues to be not a convincing performance, if that is to be the pattern ahead. I'd previously laid out potential targets below for such a pattern anyway. Thus, a primary target X would be in the 82.45 zone, with a secondary harder to reach target X1 in the 81.45 zone. I nevertheless would still, once again, caution you on the possibility of false breaks here in either direction, just in case. Looking below, we now have the short medium moving average currently at 83.06, and then the late September low at 8300 as supports. Meanwhile above, beyond the October 2022 high at 83.27, we have the spiking highs of late September and October, just over 83.30. Now, so far today, the market seemingly utilizing the downtrend extension of the ascending triangle pattern as a base for an attempt higher to try and tackle the October 2022 high, breaching it but not breaking it. Well, not yet anyway. US dollar against the Brazilian real. A bearish closing Black Maribosa 2 days ago prior to the holiday that closed below all of the following. The highlighted in gold long moving average currently at 499.29. The upper trendline extension highlighted in purple on my daily chart of the August to September rectangle pattern currently at 497.67. The flatlining short medium moving average currently 498.58, and the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. Below the market, we have a combination of seemingly strong supports with the declining broken upper tine, currently at 492 even, highlighted in dark blue on my daily chart, and the slowly rising medium moving average, currently 491.72. The low close was the lowest we'd seen since late September. Overall, in a bigger picture, the market continues to be moving within the breach, but ultimately still valid November 2022 to date bear channel. That's currently 469.96 to 515.61. That's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line capping the market in early October. US dollar against the Mexican peso. A bearish Black Maribosa and second bearish Black Crow yesterday. Prices punched down through the declining long moving average, currently 1768.55. The August 2017 low at 1756.93. And the nearby rising short medium moving average, currently 1756.43, halting before testing the July 2017 low below at 1743.62. Overall, this is a more than suitable continuation to the break lower below the mid-September to date lower bull channel line, currently at 1845.67, which is highlighted in dark green on my daily chart, as well as below the late September to date ascending triangle, currently 1843.03 to 1845.92, and that's highlighted in pink on my daily chart. It also seems to move the July to September lopsided reverse head and shoulders pattern over to a continuation pattern instead of a bottom reversal. I had recently been mindful of the secondary hard to reach target further up, target X2 in the 1894 area. Well, I will retire this target out of this commentary and instead concentrate on the targets below for the break below this ascending triangle pattern. In such a pattern, we have had a primary target X in the 1767.05 zone below and a harder to reach secondary target X1 down in the 1704.90 zone below. I'm pleased to see that target X in the 1704.90 zone was reached yesterday. Well, actually, that was down at 1767.05, in fact. My apologies for that one. 1704.90 is X1. So 1767.05, the target X has been reached. Now, I've been cognizant of the action since late September, exhibiting elements of a double top, and it is now about time I laid out some ideas for such a pattern. Thus, a primary target X3 would be down in the 1736.45 zone below, and a secondary harder to reach target X4 will be down in the 1703.70 zone below. So far today, nothing much, looking like an indecisive doji cross right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.